Hey folks, it's Simon here with your Tao Daily for market close as of Tuesday the 13th of May 2025. Chart of the S&P 500 ETF in front of us here. And what we've seen has been an historic recovery here. This is one of the biggest short-term comebacks in S&P 500 history. We've now rallied approximately 22% from the low back in April to where we are on yesterday's close. Not only that, we're only about 4% from the previous all-time high. All right, so to say that the market will challenge, potentially exceed its all-time high now, not a big call. This is only the fifth time since World War II the S&P has managed to erase a year-to-date decline of more than 15%. All right, so it is an historic rally, similar to what we saw in 2020. Now, if we jump into the S&P futures here, if you've been following these videos at all over the last 3 or 4 weeks, you'll know I've been talking about this median line. All right, this is the aqua-colored line in the middle of the chart. And my premise the whole time has been, so long as price is below the median line, we're more likely in a sell the rip environment. But as soon as price can start closing above the median line, we go from sell the rip to buy the dip sort of environment. Now, this happened about 3 weeks ago. We had 2 consecutive closes above the median line back here. All right, and so that puts us into a far more constructive framework. And look, not only have we cleared the median line, but we've cleared the 200-day moving average, in fact, gapped above it. Now, Monday's gap was a 3% up gap. Again, that's reasonably historic. It's only the 17th time in the S&P's history that it's had a 3% up gap. All right, so these market conditions are uncommon, and they are bullish. The other thing that looks bullish here is breadth. The advanced decline line has made a new all-time high. That is a strong indication that the S&P will do the same. It's no guarantee, but like I said, it's a strong indication. Bonds aren't buying the rally. If we look at TLT as sort of a barometer for what bonds are doing, it looks like it may come back and touch these Fibonacci extension levels, which have acted as support on the prior 2 occasions. That could set us up for a nice counter-trend long setup in bonds. We're not quite there yet. If we look at crude, that is pulling back a little bit today pre-market, but it looks to me like crude has put in an important bottom here. I wouldn't be surprised if that's a multi-month low. That's what I got for you today, folks. I hope it helps, and I'll catch you tomorrow. Thank you.